Hey everyone, welcome back to Corporate Decoder, the place where we unpack the biggest financial stories and this upcoming report. Let's just say it is going to be a wild ride in the world of aerospace manufacturing. We're diving deep into Spirit AeroSystems Holdings Incorporated CNQ report for the period ending the 2nd of October 2025. Get ready for a financial roller coaster with significant events shaping the company's present and future. First up, let's talk about the money coming in. For the 3 months ending the 2nd of October 2025, Spirit AeroSystems brought in $1.585.4 million. That is an increase from the same time last year when they pulled in $1.470.6 million. But over the 9-month period, things are a bit steadier, with $42.3 million for the current period compared to $65.3 million in the previous year. This shows a slight uptick in overall business. Now here is where things get a bit more complicated. Cost of sales, in simpler terms, the cost to actually make their products. For the 3-month period, they spent $2.205.0 million. That is a huge jump from last year's $16.6 million. And over 9 months, it is even more striking $6.054.4 million compared to $5.580.3 million. This massive increase coupled with their revenue numbers means they are spending a lot more to make each dollar of product, which is usually not a great sign. And that leads us straight to the gross loss. Instead of a profit, they are actually losing money on the goods they sell before even accounting for other expenses. For the 3 months ending October 2025, this gross loss was $0.6 a big leap from last year's $0.6 gross loss. Over 9 months, this loss ballooned to $0.6 from $0.6. This is a huge red flag, folks. It means on core operations, they are burning through cash. The company explains this with something called changes in estimates. Essentially, their projections for costs on long-term contracts are constantly shifting upwards. They're seeing higher forward loss charges on key programs like the BT Sensi and AR Wushu and AR Arshu. This suggests ongoing production issues, supply chain problems, and general cost increases are eating into their profitability. When you add in all their other operating costs like running the company and research, it gets even worse. Their operating loss for the 3 months ending the 2nd of October 2025 was a staggering $646.5 million. Last year, it was $350.1 million. Across 9 months, that operating loss is $14.3 million, way up from $209.0 million last year. Simply put, the company is losing a lot of money running its day-to-day operations. And when all is said and done, the bottom line is a big net loss. For the 3-month period, they lost $724.0 million. That is an increase from last year's loss of $476.6 million. Over 9 months, the loss is $1.967.5 million, up from $1.508.3 million. That is nearly $2 billion lost in just 9 months, folks. Let's look at a key table here. The revenue has increased, but when you look at it, has increased even more dramatically. This widening gap is exactly why a company would report instead of a gross profit, it signals that the cost to produce their goods is outstripping the money they are getting from selling them. A big reason for these financial struggles is their heavy reliance on the B.737 program. For the 9 months ending the 2nd of October 2025, fully 39% of their entire revenue came from this single aircraft program. When a company has that much dependence on one customer or product, any issue with that product directly impacts the entire company. For Spirit, the B.737 MAX program has been a constant source of trouble with groundings, production rate changes, and now ongoing certification challenges for new models. They also rely heavily on Airbus, but even those programs are showing significant financial strain. The AR Wushu and AR Arshu programs are both reporting massive forward loss charges. This indicates that their current contracts for these programs are expected to cost them more to build than they will be paid for by the customer. Now, for the really dramatic news, in June 2024, Spirit AeroSystems entered into an agreement to be acquired by Boeing itself. This merger is contingent on several things, including regulatory approvals, and Spirit AeroSystems completing the sale of certain businesses to Airbus. The deal is expected to close in the 4th quarter of 2025. Spirit is also dealing with a major divestiture of its Airbus business to Airbus. They also sold their Malaysian business and a subsidiary called Fiber Materials Inc. All these major transactions and sales show the company is in a period of significant transition, likely driven by these financial pressures. And speaking of financial pressures, let's talk about liquidity. The report makes it very clear substantial doubt about the company's ability to continue as a going concern exists. This means they are very concerned about not having enough cash to operate in the near future. They have accumulated huge losses and significant debt, and they will require additional liquidity to keep operating over the next 12 months. Boeing has provided them with significant advances to help them stay afloat, but there is no guarantee of further support or if all these plans will truly fix their cash problems. Look at this from the cash flow statement for the 9 months ending the 2nd of October 2025. They used $750.4 million in operating activities. That is money they spent just to keep the lights on and keep producing. While this is better than last year's outflow of $1,257.5 million, it is still a massive cash drain and highlights the precariousness of their financial health. On the balance sheet, as of the 2nd of October 2025, their total assets are $6.104.9 million, but their total liabilities are a whopping $5.460.2 million plus other long-term liabilities. What is really concerning is their total stockholders' equity or deficit, which is negative $4.518.1 million. This means, in simple terms, the company owes more than it owns, and its stockholders collectively have a negative net worth. In essence, Spirit AeroSystems is in a very tough spot. They are losing a lot of money on their core operations, relying heavily on a few major customers, which have their own problems, and are undergoing significant strategic shifts, including a pending sale to Boeing and the sale of major business units. The company is explicitly stating that substantial doubt about its ability to continue as a going concern exists. This is the most serious warning you can see in a financial report. Now, looking at these results, Spirit AeroSystems is clearly facing immense challenges. Their massive operating losses and negative equity signal deep financial distress. Their heavy reliance on Boeing and the ongoing difficulties with key programs like the B737 MAX and their Airbus contracts are significant weaknesses. The pending sale to Boeing and the divestitures of other businesses are likely attempts to restructure and survive, but the path forward is extremely uncertain. The biggest risk is their ability to secure enough cash to keep operations going while navigating these complex transactions. The airline industry itself is fragile, and any further disruption could push Spirit closer to the edge. They have a massive debt burden, and their ability to generate positive cash flow from operations is currently non-existent. The fact that the report explicitly states substantial doubt about their ability to continue as a going concern is not something to be ignored. While the Boeing acquisition offers a potential lifeline, it is also dependent on regulatory approvals and the successful completion of the divestitures. If those fall through, or if Boeing reevaluates the deal based on Spirit's ongoing financial performance, the situation could become even more dire. So my take right now is that Spirit AeroSystems is in survival mode. The numbers paint a grim picture of operational losses and a deeply negative equity position. The company's future hinges on the successful completion of the Boeing acquisition and the execution of their liquidity enhancement plans. Until then, the risks remain extremely high. Alright, that is our breakdown of Spirit AeroSystems Holdings Incorporated CNQ filing. What is your take on these numbers and what they signal for the company's future and its impact on the aerospace industry? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.